Hi, I'm Jen Benepe, and this is The Real Deal. Earlier, I spoke to Jonathan Miller, CEO of appraisal firm Miller Samuel. On July 3rd, he released his greatly anticipated second quarter Manhattan sales report. He found that prices continue to rise in Manhattan, though inventory levels are accumulating and total sales are down. Are New Yorkers finally trying to cash out of their expensive apartments? Mr. Miller will tell us that and more. Thanks for coming today, Jonathan.
Glad to be here.
Great. Okay, so when we spoke last quarter, prices were going up and sales were going down. The trend seems to be continuing in this quarter also. What's happening?
Well, you really have a number of things happening. The first is that sales are down from last year, but you have to remember that last year was the level of the pace of sales was at an all-time record.
So we'll compare it to 2006. Are we doing better or worse?
I'd say we're sort of in between. Sales activity today is less than last year, but more than in '06. And listing inventory is just the opposite, that we have more listings today than last year, but less than we did in '06.
Okay, so sales at 15 Central Park West and the Plaza, some of those developments that you were sort of referring to, they really skewed a lot of the numbers, but at some point, did you back those numbers out, and did you see the same trend?
If I remove the data set of those two buildings, all the transfers from this past quarter, the median sale price for the overall market still increased 11.2%. So clearly, the middle of the market has been moved higher simply because there's a heavy concentration of high-priced property that has closed.
Now let's talk about some of the other indicators. The number of sales dropped 21%, and units are taking longer to sell. They're staying on market on average 135 days versus last year this time period was 117 days. That's a total of 2 weeks more. Is there a weakening of the market one layer under the luxury market, could you say?
That would be a fair characterization. In fact, I think what I'd be more concerned about if you're looking at any segment of the market in general would be the middle of the market. For the luxury sector, which started at 3.15 million this quarter, inventory is down by about a third, so it's very tight. So what you have left is in the middle of the market where it's fairly flat, and that would be characterized by primarily 1- and 2-bedroom apartments, large ones and 2-bedroom apartments.
Okay, now also looking a little bit more at the details underneath your numbers, condo sales seem to do better than co-op, and that probably had something to do with a lot of new developments.
Correct.
Price increases are higher, and inventory was not accumulating as quickly. Is this all because of new developments? What's the underlying?
I think it's primarily those factors that made the condo market look stronger than the co-op market is almost exclusively related to new development.
Now, what are some of the, you sort of briefly, alluded to this, what are some of the worrisome indicators going into the third and fourth quarter of this year, and can we expect, also you alluded to this, that prices now will start declining?
If you look in the near-term future, the second 2 quarters of this year, third and fourth, I feel in many ways that the die has been cast, meaning that the bonus compensation from Wall Street was paid out, the dollar is remaining weak. And I've been saying this since the end of last year, that I'm more worried about '09 than I am about '08.
So, Jonathan, why are listings accumulating at such a fast pace? Are people finally getting the idea that now's the time to sell? Well,
sort of. I think there's a couple of things going on. One is that inventory tends to be added to the market at a relatively, on a seasonal pattern. And from January to early part of May, you tend to see inventory rise. It has been rising at a faster pace this year than we have seen in the last couple of years, and the reason for that is you have a lower pace of sales. So when you have a lower pace of sales, you don't have that inventory being eroded and rising. There's some discussion about whether we're sort of developing the cash-out mentality in some sellers that we were seeing in 2006. And we're hearing a lot of complaints within the brokerage industry that the listings entering the market, there's a lot of disconnect in terms of whether they're priced at or near market levels.
So can you talk a little bit about that?
Think of it as an on-off switch. So you have sellers being unrealistic, you have buyers being unrealistic, and what happens? You have a slowdown in activity.
Well, thank you very much for coming to talk to us today.
Always a pleasure.